Today, we're going to decode one of the most powerful investing lessons ever written. Seriously, it's a message of incredible calm that was delivered right in the middle of a full-blown financial hurricane.
So let's just travel back in time for a second. The year is 1987. You've got big hair, neon everything, and a stock market that was about to test the sanity of every single person on the planet. Because on this one day, a day that history now calls Black Monday, the market didn't just dip. It didn't just have a bad day. It completely shattered. The Dow Jones Industrial Average just fell off a cliff, dropping by over 22%. Now to this day, that is still the single worst daily percentage drop in history. Panic wasn't just a headline. You could feel the fear in the air. And get this, who did Buffett blame? He pointed his finger directly at the so-called professionals. See, many of them were using the strategy called portfolio insurance, which pretty much forced them to automatically sell more and more stock as prices fell. I mean, think about that for a second. It is the definition of pouring gasoline on a raging fire. And don't for a second think this is just some old history lesson. The exact same logic drives some of today's automated trading algorithms that can turn a dip into a flash crash. So you've got this global meltdown happening, you have investors everywhere absolutely terrified of a new Great Depression, and in the middle of all of that, Warren Buffett sits down to write his annual letter to his shareholders. And what he chose to focus on, well, that's the entire lesson right there.
Honestly, reading Buffett's 1987 letter today, it feels like you're reading a message that was beamed in from a completely different universe. While the rest of Wall Street was having a collective nervous breakdown, Buffett was, well, he was just talking about business. Real, boring business.
And the contrast is it's staggering. It's night and day. Wall Street was completely glued to the flickering red numbers on the screen, the daily price swings, the fear, the absolute chaos. Buffett, on the other hand, he was focused on the actual earnings of his companies, the quality of his managers, and the strength of their relationships with their customers. He went on for pages and pages, not about market crashes, but about the real world. He was celebrating this 94-year-old dynamo, Mrs. B, selling furniture. He was analyzing the percentage of the Buffalo news that was actually news. He even went into detail about how See's Candies got hundreds of angry letters from passionate customers. He was talking about things that don't change just because a stock ticker has a bad day.
And he laid out his whole philosophy right there. He argued that Wall Street's obsession with constant, feverish change and exotic new businesses was just a fantasy. He believed true, lasting wealth comes from stable, understandable businesses that do ordinary things exceptionally well year after year after year.
So, how did he stay so calm through all this? Well, this is where Buffett gave us this incredibly powerful mental tool, an idea he picked up from his teacher, Benjamin Graham. He introduced us to a character he called Mr. Market.
Okay, so imagine you're in business with this guy, Mr. Market. And as Buffett puts it, he's got incurable emotional problems. Every single day, without fail, he shows up and makes you an offer. He'll either buy your share of the business, or he'll sell you his.
Some days, Mr. Market is just on top of the world. He's totally euphoric. All he can see are blue skies ahead, and he'll offer you a ridiculously high price for your shares. But then there are other days. Days exactly like Black Monday, where he's just terrified. He's depressed, he sees nothing but doom and gloom, and he offers to sell you his entire stake for pennies on the dollar. He's just desperate to get out. But, and this is the magic trick, you don't have to do a single thing. You are completely free to just ignore his wild mood swings. If his price is just silly, you just say, "No thanks, buddy," and he'll be back tomorrow with a brand new offer.
And that is the entire point, right there. Mr. Market's emotional problems are there to be your opportunity, not your instruction manual. You're supposed to use his foolishness. You're not supposed to let it infect you. You see, this mental model is what allows Buffett to ignore all the noise and focus on what truly matters, owning businesses that are practically invincible. He isn't looking for the next hot stock, He's looking for what he calls a fortress-like business franchise. A company so dominant, so beloved by its customers, that it can withstand almost any economic storm or any attack from a competitor.
And his favorite example from the letter isn't some high-tech wonder. It's a simple, old-fashioned candy company. Let's just take a look at how See's Candies built its fortress.
It's really not that complicated. See's has a product people absolutely love, and it's backed by decades of brand loyalty and what Buffett calls a genuine affection for the customer. This fortress is so strong that when the company tried to discontinue two types of candy, Hundreds of customers wrote passionate, angry letters demanding they bring them back. Now that is a bond that a stock ticker can't even begin to measure.
All right, so after surviving one of the worst market crashes in history, what's the one timeless lesson we can pull from this incredible letter? What's the golden rule?
It's right there. Success isn't about some complex computer model or predicting the market's next twitch. No. It is about combining solid business sense with the ability to build a psychological wall between yourself and, as he puts it, the super contagious emotions of the crowd.
So here it is, the framework. Number 1, own businesses, not just stocks. Number 2, treat the market's manic behavior as an opportunity that's there to serve you. And number 3, and this is the most important one, master your own mind. This is what turns volatility from a huge risk into a massive advantage.
Because the one thing we know for sure is that Mr. Market will have another breakdown. He always does. The real question this letter leaves us with is this: when that panic comes, will you be infected by his fear, or will you be ready to be served by the opportunity he offers?